When you are sitting on a low credit score, the simple act of trying to borrow money feels like walking through a minefield. Every application carries the threat of a hard credit pull, which drops your score even lower, and most traditional lenders seem to slam the door before you even get past the first screen. That creates a very specific kind of anxiety when you are just trying to cover a tiny financial gap, a $50 utility bill, a full tank of gas to get to work, or a few basic groceries to bridge the gap until Friday. You might find yourself looking at cash advance platforms like FloatMe and asking a very direct question. Can you actually use FloatMe if you have bad credit, or is this just another financial door that is going to be slammed in your face? The short and immediate answer is yes, you can absolutely use FloatMe if you have bad credit, because FloatMe does not run a credit check at all. They do not pull your credit report from Equifax, Experian, or TransUnion, nor do they report your activity to those bureaus. Whether your credit score is 800 or 450, FloatMe does not care about that specific three-digit number. However, understanding that a credit score is not required is only half the battle. Just because they do not look at your credit history does not mean everyone automatically gets approved for cash advances. FloatMe trades the traditional credit check for a completely different evaluation system, and if you do not meet their specific internal criteria, you can still be denied access to cash advances despite the no credit check promise. To understand how FloatMe works, you have to look at what they evaluate instead of your credit report. Instead of pulling credit data, FloatMe connects directly to your primary checking account using secure integration software like Plaid. They analyze your real-time banking data to determine if you are a safe candidate for an advance. The core fear for most people applying with bad credit is that hidden algorithms will reject them anyway, but FloatMe looks at very specific behavioral metrics. First, they want to see recurring, predictable direct deposits from an employer or regular income source. Second, they evaluate your account balance history to ensure your checking account is active and consistently maintains a positive balance above a certain baseline before your payday. Third, they verify that your account has been active for a set minimum duration and is not a brand new or rarely used account. This creates a crucial point of distinction for anyone trying to navigate emergency finances. Bad credit will not block you from using FloatMe, but poor account management or inconsistent income patterns will. If your checking account frequently incurs overdraft fees, suffers from negative balances, or lacks a regular direct deposit schedule, FloatMe's automated system will likely limit your advance limit or deny your request for a float altogether. Regardless of how badly you need the cash, it is also vital to understand the structural limitations of the app so you do not fall into a trap of false expectations. FloatMe is designed specifically for micro advances, capping advances at relatively low amounts, often starting as low as $20 to $50. If you are looking to cover a major expense like rent, a car repair, or a massive medical bill, FloatMe is not built for that scale. Furthermore, while there are no interest charges or traditional late fees, FloatMe operates on a paid monthly subscription model along with potential expedite fees if you need the money immediately rather than waiting standard processing days. Your actionable takeaway when approaching FloatMe with bad credit is to focus entirely on optimizing your connected checking account. Before applying or linking your account, ensure that your regular direct deposits are landing predictably in that specific account. Keep a small buffer of cash in the account to prevent it from dipping into negative balances, as overdraft triggers are the primary reason users without credit checks get turned down. Use FloatMe strictly as a temporary, short-term tool for tiny emergency gaps rather than relying on it as a recurring source of income. And monitor your monthly subscription fees to make sure the app remains a cost-effective solution for your financial routine.